Hi there and welcome to the Stockscores Market Minutes for March 7th, 2016. This week my topic, what is the first step in chart analysis? Anytime I look at a chart, I really force myself at first to draw or imagine where the trend lines are. I like to define the upper and lower boundaries of the price channel. I'll show you that in a moment. And I do this because it helps me understand if the stock is overbought or oversold, or if there is potentially a trend change underway. Now, the reason you have to do this, and I've been trading for 26 years and I still need to do this, because we as human beings tend to judge the market or anything based on what we have recently seen. And so we tend to be more positive about a stock or market because it's been going up. We're not looking for the turn that may inevitably happen because it has been going up for some time. Same can be said for a downward trending market. We tend to get most fearful at the lows because we've been watching it go down day after day, week after week, month after month. By drawing the trend lines and defining the price channels, we can go through that process to really see where price is relative to the trend line and really get a sense of when a market is overbought or oversold. Let's take a look at this chart and I can help you understand what I'm talking about. What I always begin with, and with some practice, you don't have to actually do this process, but begin by defining the inflection points. These are all the highs and lows on the chart, the price levels where price stopped going down and started going up. You can then draw a line across those inflection points to define patterns. So there we have a pennant pattern with a breakout. That put the stock, or in this case an ETF based on the energy sector, into an upward trend. I can then define the lower boundary of my trend, the upward sloping trend line, something like that. And I can draw a parallel line that cuts across the tops, something like that. Now I have defined an upward sloping channel. What I don't want to do is be a buyer up in here, even up in here, because that's the point when price has run away from the trend line because of emotion. And if I'm buying up there, I'm kind of the sucker in the crowd. That's how I like to look at it. Instead, I want to be buyers of upward trends on pullbacks. So when the market pulls back and then breaks its pullback, that's when I want to be a buyer. And what's interesting on the energy sector on Friday is that it kind of broke the upward trend line right here. Just going to erase some of these lines here so I can draw this a little more clearly. If I draw this line really tight across those bottoms, you can see that the upward trend line was broken on Friday. And that may set us up for a trend reversal. So by going through this process, I've identified that perhaps the upward trend in the energy stocks, U.S. energy stocks for the week, may have run out of steam after a very strong 4 days. In fact, the trend went parabolic middle of the day on Friday and then started to pull back. So that's a pretty good sign that we'll see some short-term profit taking. I'll wait for confirmation of that on Monday, but something to think about going into next week. All right, let's get into this week's analysis. This is the 30-day, 60-minute chart of the S&P 500. You can see that we've got rising bottoms, buyers in control. You can also see that we've got rising tops, but they are not rising as quickly as the bottoms. That is a rising wedge pattern. It means that the sellers are gaining some strength. The buyers are losing their enthusiasm over time. It's really only important when you get a breakdown from the tip of the wedge. That could happen Monday, so keep an eye out for that. This is a bullish chart because we're in a bullish trend, but because we've been going up for quite a long time, and because of this rising wedge pattern, I would call this a neutral chart. I think that there's a good chance that we'll see a pullback soon. Now, looking at the longer term chart, this being the 3-year weekly chart, we've got the downward trend line that looks something like this. There's another one. It doesn't show up so well on the weekly, but it does so more on the daily, where you basically can see that the price action this week has taken price up to the shorter term downward trend line. And basically what happened here is you had emotion pushing prices down way too quickly. They've now come back to the trend line. And now what we have to wait and see is if it rolls over and heads lower again. Now, going back to the sell-off that we had in August, we had a very similar pattern where we had a downward trend line that looked something like this. We ran away from the downward trend, came back, but instead of rolling over, it busted right through and up even more. It ultimately didn't make a new high. You can see there that we have a falling top pattern, and that is a sign that the buyers are losing their enthusiasm, their motivation over time. And this may allow this market more likely to get stuck here. Again, next week going to be real important here. If we bust through, then we're probably headed up to this level at roughly 205 on the S&P ETF, SPY. But, good chance we roll over here, and that could bring us to new lows. So we want to keep a close eye on what happens next week, particularly early in the week next week. Moving on to the Russell 2000. Small cap stocks have had a great little run here for the last almost a month. You can see this nice, sharp, orderly upward move. The downward trend line looks something like that, and we have managed to break through that this week. So small caps are actually looking or have been performing better than the larger caps. I think part of the reason is the expectation that interest rates are going up. You have investors going back to taking some risk instead of just borrowing money really cheaply and buying large cap stocks that pay dividends. So that's an interesting occurrence. No sign of weakness in the Russell this week, no sign of weakness in the small caps. And so we could still move up into this first level of resistance or this next level of resistance here. But I do like how the Russell is showing a chart pattern there for the small caps. Moving along to the Canadian market. Canadian market really benefiting the last little while from stabilization in oil. Not that oil prices are great. They're still very low, but they're at least stable and trying to move higher. But you also have gold moving higher, and those things are heavily weighted, of course, in the mining and energy sector in Canada, where you have so many of those stocks listed. So we've got a nice upward trend line underway here. Top channel of that is pretty orderly. We've got basically a linear upward trend. No sign of weakness yet, but what you want to watch for is, do we break this? And that would indicate some profit taking underway. For now, it's a decent chart, but because it's gone up quite a bit in the short term, thinking about the gains it's made in the last less than a month, I'm a little bit inclined to think that there's got to be some profit taking soon. No sign of it, so stay optimistic. Just dance close to the door in the short term. Now, in the longer term chart, very interesting, because we have this long-term downward trend line, which I've been talking about week after week. It has been broken this week. And the only caveat on that is it's been kind of going up for 5, 6, 7 weeks in a row. Usually when you get a break of a trend line from a trend that's been up for a while, so in other words, we're breaking this downward trend after being up for quite some time, often you'll get a little retest and then try to move higher. So that's maybe what will happen. I think short term, good chance we see a pullback, but longer term, I like how the Canadian market chart is shaping up. It's really going to be dependent upon whether there's stability in oil or not, and so far, certainly that is the case. The market is trying to stabilize on oil. TSX Venture, which has been the biggest dog for many years, has now broken this downward trend line. Could draw this one like that. It's been broken, that one as well. It did that a few weeks ago, and it's now really trying to push higher. It's fighting an uphill battle. There's so much pessimism overwhelming this market, but notice the sentiment stock score this week. It's up above 60. That's a positive sign. It shows us that momentum is turning, and like I said, I've been bearish on this market for a very long time. I'm starting to see signs that money is coming back to these junior mining and energy plays. And, it's when you least expect it, sometimes that's the best time to be a buyer. So I would start looking for opportunities in that market if you like the Canadian micro cap, small cap stocks. TLT, which is the Treasury Bond Index, it tends to go up when there is some expectation of turmoil. You can see that when the market was correcting, it moved up quite nicely. We're now getting a little break of this short-term upward trend there. Could see a bit more of a pullback if the market continues to move higher. But because my expectation is that we probably see the market roll over and get some profit taking short-term, I think that this may come up and retest here. If it breaks this, that probably coincides with a breakdown in the market. So if you see treasuries break up through this level, next stop this level, that's probably because the market is seeing some turmoil in the stock market, which is a sign that the market's going to roll over. So far, that's not the case. But this one usually tends to react to the stock market more than it does anticipate the stock market. So I show it here for your interest, but I'm not too worried about watching that right now. US dollar, a little bit of weakness this week. I think the US dollar was weak against just about every currency in the world, and largely because the expectation is maybe the Fed doesn't raise rates, which means the US dollar isn't as attractive, which means you get some selling pressure on it. Gold has gone up this week. You know all the stuff that's been going on in the market in the last week or two. So a little bit of weakness there in oil. That's going to be, in the US dollar. That's going to be supportive for oil, supportive for commodities. We've seen that strength going on. But big picture, we're still basically stuck in a pennant pattern. So there's no decisive break for the US dollar that tells us where it's going to go. It kind of looks to me like it wants to just go sideways for another few weeks, and then we'll get the ultimate break. The market is waiting to see what the Fed does next. Gold, benefiting from that weaker US dollar, had a decent week to the upside. Feels to me kind of oversold. The market opened strong Friday, but closed near its lows on Friday. That's what I call a bursting bubble. And so I think we could see a little bit of a pullback. But the weekly chart for gold is still very healthy. We're in an upward trend. We've broken the downward trend. We just never really did it from a rising bottom. This was kind of the low here. So I don't know, I'm kind of skeptical about gold because I've just seen so many times where gold has had these little runs. Granted, this is the first time we've actually broken the downward trend line, so that's a positive. But I would treat gold as a trade. Don't buy it and put it away and forget about it. Oil, good showing this week, had some good upward price action, and you can see it's just trying to get through that downward trend line. Not really from a rising bottom, so I think oil has a lot of work to do. You know, I like what oil did this week, and particularly what oil stocks did this week. The oil stocks really outperformed oil this week. So you got a lot of people piling in, speculating that oil is on the turnaround. I think it's early to say that. I think you've got time. I think that you could see a pullback in these oil stocks that did really well last week. Maybe this week pull back. So trade them. You know, there's lots of volatility. I had a couple of picks in my daily newsletter that went up, 18, 20, 25% in 2 or 3 days because that was the trade. But I think that was a trade. It's not yet a long-term investment. Finally, the VIX chart, which shows us fear. Fear generally been on the decline. But notice this, it opened weak on Friday, closed above its open. I bought a little bit of the VIX going into the close on Friday just because I think that the market's a little overbought, which means fear is a little bit oversold. And we could get a little bump next week if the market does a little bit of a pullback. I didn't buy a lot of it because I'm not really confident in the trade, but I do want to, at least have my toe in the water if we do get a pullback next week. So my ratings then going into next week, I basically upped my ratings on everything to neutral across the board, where I've been bearish on most of the longer term time frames. The bulls started March with surprising strength, breaking the downward trends that we've seen in things like oil, and the stock market has done a lot better after that corrective action January and February. But I also think that there was this massive amount of short covering and rushing for the exit door all at once, and that maybe sent prices up too quickly. I expect that there will be a pullback before higher prices, so I want you to be cautious short term, but the fact is you got these attempts at breaking longer term downward trends, so that basically warrants a little bit more optimism longer term. Commodity prices are improving, but they're still at relatively low levels, so don't think that the energy companies and the banks that have loaned to the energy companies are out of the woods yet, because many of these companies could still have financial difficulties, even if oil's at $40 a barrel. So be cautious, but at least you got a little bit of a trade on the long side here in the last little while. All right, well, that has been the Stockscores Market Minutes for March 7th, 2016. Have a great week in the market. Remember to follow me on Twitter. Remember to subscribe to this YouTube channel, and we'll see you next week. Trade well.